why egg prices matter in the real estate market today. Yeah, and I know you're looking at me like, man, you're crazy. That's all right. If you stick with me till the end, I'll bring it all together for us, okay? I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's February 10th. We're going to talk about what the parallels between egg prices and real estate prices are. Before we jump into that, a couple things. YouTube algorithm, please like, subscribe, ring the notification bell. Comments are always appreciated. I'd love to hear what you think about what I'm going to say today and any other real estate related topics. Digging into the Connecticut real estate market status right now, we have 3,645 houses on the market. We're down 126 from last week. And if you've been watching my videos, you know that every week for the past several months I've been saying we're down 100, we're down 200. Inventory's dropping. We have 102 coming soon. It's not enough to fill the gap, so we're going to continue trending down. We closed 2,439 houses in January. So that is down from previous months, but we also have fewer houses on the market. We got about 1.5 months of inventory, a little bit less. So let's jump into this whole question, the purpose of the video. This article is talking about avian flu. It's from the CDC back in November. 50 million birds, some poultry had died at that point because of the avian flu, and it was still spreading. That resulted, from a chicken perspective, in smaller flocks, which means less eggs. On top of that, the farmers need to replace those chickens that died, so they have to hold back even more eggs from that smaller available number in order to hatch them and grow the chickens, which results in even fewer eggs available to sell. That's why, from a supply and demand perspective, supply is way down, demand hasn't changed, so prices go up. That's why you're seeing $5 to $9 dozens of eggs. Over the next few months, this is going to work itself out as these new chickens get to the point where they're able to lay eggs and the supply will come back. It'll be good. So now you're sitting here saying to yourself, okay, I can see that. I guess I can see from A to B on that. What does that have to do with real estate? Fair question. So what event in real estate could you equate loosely to the avian flu? Maybe the Great Recession in 2008 and the housing crash? Let's do that. Among the number of problems that occurred related to that, one of them was new construction fell off a cliff. That means for a decade, people were barely building anything. Makes sense. There's a huge inventory. Prices were down. It didn't make financial sense. This blog by Jeffrey Howard, who's the Executive Vice President and Chief Administrative Officer at Fannie Mae, is pretty good. It talks about the housing market. It talks about how every locality is experiencing this. It's across the U.S., but every market is a little bit different, so that local market has to deal with their housing crisis in their own way. The bottom line is, even though many areas have started building and have been building for the last decade at a pretty decent rate, we still have a gap of somewhere between 3.8 and 6 million homes. And there's about 84 million homes in the U.S., just to give you an idea of the scale. The gap is not spread evenly across the U.S. Connecticut, we haven't built anywhere near as many houses, since 2008 as we built before. It was 11,000 before, about 4,000 now, the latest numbers that I saw. So check me on that if I'm wrong. Bottom line, this is why I'm saying that the Connecticut data does not support price erosion here. We have so little inventory that there's just no reason for prices to come down. A lot of people come up to me and they always ask, and it's always in this conspiratorial tone, hey, you can let me know, don't tell anybody else, but when are housing prices going to drop? I'd really like to know. I want to buy, but the prices, they're just too high. And unfortunately, I have to tell them the same thing I just told you. Their first response is, well, but interest rates are so high, the prices are definitely coming down. Well, interest rates don't have any direct impact on price. What interest rates impact is demand. And the idea is you drive demand down below supply. So now there's too much supply, prices come down. Unfortunately, in Connecticut, the problem we have is our inventory is so very low that the interest rates that we've seen so far have not driven demand below what the supply is. And I'm sure they could raise interest rates to the point where demand gets that low. I don't know that I want to go through that. I think that'd be pretty ugly. The next response that I get is, well, I saw an article, I saw a podcast, I saw a new program. Fill in the blank there. and they said the housing market's going to crash. Okay? My response to that is, if the sources are honest, they're going to say in some areas. Because there's no one who's looking at the data who's saying that there's going to be a wholesale market crash. No one. They're saying that some areas are going to see decline, some areas are actually going to see an increase, and some areas it's going to stay flat. I think we're going to stay flat for the next couple of months, and then by mid-year, we're going to start going back up again. Areas that they're seeing decline. California is a good example. They're seeing people leave their state. So they're selling a house, not buying another one in the state, and there's not enough people coming in to buy those houses that are on the market. So inventory is going up. And demand is down because people are leaving and not enough people are coming in. So low demand, high supply, prices are starting to come down. Makes sense. In Connecticut, we've got the exact opposite. We've got people coming in, and we haven't built enough houses, and we're not building enough new houses. So we have a low supply, a relatively higher demand, so prices are flat to starting to go up. I've seen, I've been in a bunch of deals over the last few months, and every single one of them, whether I'm on the buy side or I'm on the sell side, there hasn't been a single one where it's only one offer. They've all been multiple offer. That's because there's more buyers than there are sellers right now. And I had a client back in 2018, 2019, I had a couple of them actually. They were like, same thing, I really don't want to buy right now. Prices are too high. Unfortunately for them, prices have gone up an average of about 37% from January 2018 until today. So it would have been nice to be able to buy at that lower price and have that 37% equity sitting in your back pocket. But unfortunately, that's where we are. What is the real takeaway here? Egg prices are up because supply is way down and demand's the same. Housing prices are flat and going to start going up again soon because supply is very, very low and demand is relatively higher. If interest rates continue to click down, we're going to see demand go back up. If interest rates go up a little bit more, we'll see demand come down, but we're still at a point where supply is lower. So we're going to have a pretty stable pricing picture here in Connecticut. There are different areas that are going to see a different result. I'm speaking about Connecticut. So it's really the egg market, the housing market, supply and demand is the push that really makes a difference. All these other things are interesting because they impact supply or demand, but they're not direct impacts on price. So that's kind of what I'm seeing right now. Hopefully there's some value in that. Please throw some comments down below if you have any questions or different thoughts. I look forward to talking to you again. Hopefully you enjoy this beautiful weather out there. Have a great day.